Hello traders, my name is Logan with Funding Tower. In this video, what we're going to be covering is our market forecast for the week of September 27th. In this video, what we hope to highlight is the best fundamental drivers for you to be aware of and stay away from in this upcoming week if needed, and also the best technical setups that we are currently eyeing up and looking to act on in this upcoming week alongside you possibly. So without any further delay, let us get right into the video. So here we are on the slideshow, and let us get right into it. For this week, in terms of our fundamental drivers, what we're looking for is Monday, 2 p.m. GBP news. That's it for Monday. Then nothing on Tuesday, and on Wednesday, 11:45 a.m. GBP news and 11:45 a.m. USD news, both in EST. Remember, all these times are in EST. Nothing on Thursday, and then on Friday, 8:30 and 10 a.m. USD and Canadian dollar news. So really not a lot of news in this upcoming week, which is a fantastic sign for us. It means we can trade without much worries at all. Now, let us get into the macroeconomic drivers also that are presenting in the world right now. So China is expanding its escalated crackdown on cryptocurrencies, as mentioned on Friday by the People's Bank of China, when they declared all activities related to digital coins illegal and must be banned. In a statement, the People's Bank of China said the latest notice was to prevent the risks surrounding crypto trading and to maintain national security and social stability. So this is not the first time China's bank has banned cryptocurrencies. This is actually well over the 10th time and possibly well over the 20th time. So I'm not too worried about this news, but it did cause cryptocurrencies and stocks worldwide on Friday to drop. Also in the news, Evergrande is a large conglomerate in China with multi-billions of dollars under management. And as of right now, Evergrande is faced with more than $300 billion in debt and hundreds of unfinished residential buildings, so homes essentially, and angry suppliers who have shut down construction sites. So they have hundreds of unfinished homes, and the workers will not continue to work because they don't have enough money to pay the workers. It's even gone to some extent where the company has asked its own employees to lend the company money. So the company started to pay overdue bills by handing over unfinished properties. And as I just mentioned, it did ask employees to lend the company money, which is just outrageous in my mind. Why is this a problem? Panic, well, obviously, first of all, it's an enormous company, and any company worth that much money, if it defaults, is going to be a huge problem, regardless. Panic from investors and home buyers could spill over into the property market and hit prices, affecting household wealth and household confidence. It could also shake global financial markets and make it harder for other Chinese companies to continue to finance their businesses with foreign investment because it may be seen as a riskier investment to lend to these Chinese companies. As of right now, foreign investors are owed $7.4 billion by Evergrande in bond payments just for next year. Bonds obviously pay out in multi-year terms, right? So just for next year, they owe $7.4 billion to these people. And they will most likely default and therefore lose out on all the foreign investors will lose their money and see their money vanish into thin air because of this default. So the authorities in Beijing have also indicated they are no longer willing to bail out foreign and domestic bondholders for this specific situation. In any bankruptcy proceeding, which is what happens when a company goes bankrupt, they divvy up the company's, pretty much what the company owns, right, its assets to the people who have a percentage share in the company. But due to this statement from Beijing, none of these foreign bondholders will get paid out their money. So all of their money will disappear. And most of these investors are from the US. So we're going to see a lot of money vanish from the US, as well as all of the money from this company in China that will spill over into the financial markets in the US. So as you can imagine, this is an incredibly large problem should this company default. So we're going to hope they do not. But we're obviously going to stay on our toes and be ready for any situation because as traders, we can make money long and short. So with that out of the way, let's go into our risk sentiment for this upcoming week. The risk sentiment for this upcoming week, as you could imagine, is mixed. We're going to keep with our risk on because all of this news is pretty much just around China. But for right now, we're going to stay risk on. It might shift to risk off in the next week or two, but we're going to see. We're going to wait and see. Expectations are higher for further economic growth in risk-on market environments. And that means for us currency traders, you can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound to appreciate should this risk-on market sentiment continue, and also indices globally. But we will have to see due to these large issues that we are currently being faced with. So let's go into our technical setups and move away from this bad news. So we're going to start with DXY. We still have our head and shoulders, which we marked out last week, and we got a retest of this line, which I said was absolutely a possibility. If we break above this high that we made, this local high at 93.52, my bias is going to shift long, but for right now, we're going to maintain a bearish outlook on the DXY. Looking into silver. So we obviously caught the trade on silver down to this level, hit our take profit, and then silver consolidated for a little bit, retraced, and then came back down to retest this low. I think we will head higher off of this low, and we maintain this low that we made, indicated by this green box. Shall we break below? My bias will shift, obviously. But what I'm going to look for in this upcoming week is an actionable trading setup around this level to continue to take us longer. Just to give you guys an idea what I'm doing in my trading, I'm taking these higher time frame setups and then I'm incorporating it with my lower time frame setups to get a very high probability and high risk to reward trade due to having a higher time frame outlook. And you can use that as confluence for your lower time frame trades. And that's what I hope you guys can use this for as well. DJI, we marked this out for you yesterday, this wedge that we had up here, and we fell out very hard when the Evergrande situation presented itself. But we quickly retraced, and we are now retesting that level. Should Evergrande default, then we will see a retest, as we see now, confirmation of this level holding, and then a push lower, and a continuation to the downside. Not too much on the foreign exchange markets for this week to keep an eye on, just NZD coming up, NZDJPY coming up in a little bit. But for cryptocurrencies, I'm going to make a bold call and say we found our low. And my reasoning for this is Elliott Wave Principle, as if you are a watcher of this series on our YouTube channel, you will know that I practice and I preach Elliott Wave Principle in my trading and for our market forecasts, because it allows me to decipher with clarity where we are in overall wave structure. So I do think we finalized our corrective wave here, and we are primed to make our next impulse. My profit targets for XRPUSD in this next wave higher, which could take months, I'm not saying this is going to happen fast, but my profit targets are $2.39 to $2.66. So for Ethereum, we are looking at a very similar situation. Our corrective wave has finalized, and we're looking at the only thing keeping us from our highs is this fractal that we retested recently, made a head and shoulders off of, and then came lower. We finished that head and shoulders, which means that it's another confluence for us to head higher. So I'm going to keep my eye on Ethereum as well, and I do think we bottomed out here, as well as on Bitcoin. But my bias is going to be long on Ethereum, and my take profits for the next wave higher, as I said, it could take months, is going to be around the $6,200 range to $7,000 range, or $6,800, $6,900. On oil, we've been talking about this trend line for a long time, and I said if we break out on the weekly, then we have a very important level to keep an eye on. And if we close here in 3 hours, because we are recording this on Friday, then we should see a continuation of the upside. Maybe a little bit of consolidation around this level, or obviously, if we get this close, which is not a very bullish close, it's not very confident, we might get a fake out and price come back lower. Either way, again, as I stated in the last 2 weeks of this market forecast, this can yield a high probability trade setup in either direction if we keep an eye on this trade. So, we're going to keep an eye. Nothing is set in stone. We don't have a bias set in stone, but we know we're at an apex of price right now, and we are looking to make an actionable trade setup should it present itself. I hope to keep you guys in the loop when that happens, because this is a higher time frame setup. Either way, we're looking to take this short if we get a bounce off this level, and long if we get a break above this level. For NZDJPY, we finished a bullish impulse wave, and I did say that we were going to retest down to this level. Obviously, we came a little bit lower, but by no means disqualified the trade. This is completely acceptable retracement. And since then, finding a low at this support fractal, we made a very strong move off of it, and my bias will continue to be bullish on NZDJPY and have more of a continuation to the upside. I saw you, sir. Whoever commented on my last week's video that I did not cover gold, I apologize deeply and I will make it up to you in this video. So for gold, I am keeping an eye on this range right here because we are retracing more than I would expect us to and more than is preferable, but I am still bullish on gold. So this is my reversal zone. If we get a break beneath this, we will reevaluate, but until we break below this 61.8 level, I will see us maintaining this bullish uptrend. Thank you so much, traders, for staying until the end. This has again been our market forecast for the week of September 27th. I really hope you pulled some valuable insight out of this video and can apply some of the things you learned in this video into your trading this upcoming week. If you're not already following us on all of our social media platforms, be sure to do so because we're releasing new content across all of our various platforms every single day and videos just like this on our YouTube. And soon we're going to be releasing a lot more videos on our YouTube, so be sure to subscribe there as well. As always, have a fantastic week and happy trading.